Good morning and welcome to our session here at Graceful Retirement. Today we will explore how low-fee index funds can support a comfortable and calm retirement. As always, I invite you to take a slow breath and settle into a relaxed mindset. In our busy lives, it can feel like investment must be complicated and full of jargon. But today I want to show how simplicity and patience can lead to meaningful growth over time. First, I will introduce the core idea. Then I will share everyday analogies. And finally, we will reflect on actions you can take. Let's begin by imagining a garden. When you plant a seed and water it regularly, you don't expect a massive bloom overnight. You expect steady growth in a quiet way. Low-fee index funds work a bit like that garden. They spread their investment across many companies rather than trying to pick a few winners. This broad approach reduces the risk of one company causing big harm to your savings. Index funds track a market benchmark rather than aiming to beat it. That means you accept the market's overall return rather than chasing high flyers. When fees are low, more of the market's return stays in your pocket rather than being eaten by costs. And over time, those savings in fees can add up significantly. In recent data, we see that many people worry about not having enough retirement income. In a 2025 survey, nearly two-thirds of savers said they feared running out of money in retirement. That concern shows how important it is to build steady habits rather than seek a quick fix. A simple, low-fee index fund strategy aligns nicely with the calm mindset of our channel. So let's clarify key concepts gently. Index fund means a pool of investments which mirrors a market index, like a large group of stocks. Fee refers to the cost you pay for having the investment managed, often expressed as a small percentage per year. When you keep the fee low, more of your money stays invested and working for you. Over long periods, compounding works to your favor, especially when costs are minimal. Compounding means you earn returns not only on your original investment but also on earlier returns. Imagine you plant a small tree, it grows and sprouts branches, and over years it becomes strong. That tree didn't grow overnight, but with consistent care it became a symbol of stability. In your retirement journey, you are cultivating a tree like that, not chasing a bloom that wilts quickly. People sometimes feel they must beat the market to win. But chasing high returns often brings high risk. In contrast, by owning a broad index fund, you share in the market's journey, including ups and downs, quietly and steadily. For many looking for financial calm and freedom, this approach fits beautifully. Now let's consider examples that connect with everyday life. Imagine you save a fixed amount each month into a low-fee index fund. Like planting a flower each month in your garden. At first you may barely notice change. But over years the flowers fill the space and the garden becomes lush. Similarly, over years small contributions build into something meaningful. Another example, think of a gently flowing river rather than a wild waterfall. A waterfall is dramatic but unpredictable and can erode the banks quickly. A slow river is consistent, nourishes life along its path, and reaches a steady destination. Low-fee index fund investing is like the slow river, steady, dependable, and lasting. Now let's reflect on what makes this strategy particularly suited for calm retirement growth. First, low fees reduce the drag on returns, so you keep more of the market's reward. Second, broad diversification, by spreading across many stocks, reduces dependence on a few winners. Third, patience is the key. Time in the market matters more than timing the market. Fourth, simplicity means you avoid complex trades, emotional stress, and chasing trends. In our quiet garden of retirement finance, simplicity and patience are virtues, not excuses. Now you might ask, how much should I contribute? Or when should I start? Those questions matter. But today we focus on concept. not exact numbers. Because getting started and staying consistent is far more important than finding the perfect number. If you delay simply because you're waiting for the perfect moment, you may lose valuable time. Time is one of your greatest allies in building growth quietly and steadily. Another practical point: decide on a comfortable contribution amount that you can maintain without stress. Then set up an automatic monthly contribution if possible, just like watering your garden regularly. If you skip contributions because the market dipped, you miss the chance to benefit from lower prices over time. Remember, the market will have ups and downs, but your long-term habit remains constant. Don't let a dip shake your confidence. Our goal is calm, not drama. Also, choose index funds that have clearly low fees, transparent structure, and broad diversification across stocks and/or regions. Avoid funds with heavy marketing promises of huge returns and high turnover. Those tend to increase costs and risk. In the quiet world of graceful retirement, being moderate and consistent beats being flashy and erratic. Now, to connect further, you may wonder how this fits with other asset types or income needs. It certainly doesn't exclude other options like bonds, stable income, or real assets. But today we give the spotlight to low-fee index funds as a foundational growth habit. In your financial garden you might plant different species, and the index fund is one reliable perennial plant. Over time you might add shrubs or small trees, income assets, real estate, but the perennial is steady and easy to tend. To maintain the garden we also need to prune occasionally. Review your funds. Ensure the fees haven't increased, and that diversification remains solid. But avoid constant reshuffling of plants, it often does more harm than good. Finally, keep your mindset gentle and patient. Growth takes time, and that's okay. Now let's summarize our key points. We discussed what low-fee index funds are, why they suit a calm retirement mindset, how everyday analogies help us understand them, and how to implement simple habits with consistency. In terms of action, pick a reliable low-fee index fund. Set up automatic contributions. Stick with it, and avoid the noise of chasing big returns. Be mindful of fees, be consistent, and be patient. As the Chinese proverb says, the best time to plant a tree was 20 years ago. The second best time is now. That applies here. Maybe you started already, maybe you haven't yet, but starting now still matters. And as the saying goes, slow and steady wins the race. Your retirement journey is not a sprint, it's a long walk in a calm and beautiful park. Stay on the path, keep walking with gentle steps, and enjoy the scenery along the way. In conclusion, comfort and calm in retirement finance come from reliable habits more than dramatic wins. Low-fee index funds offer a gentle yet meaningful growth path, well suited to those who want financial freedom without stress. Thank you for being here and sharing this quiet journey with me. I hope you feel more confident to take a small but steady action toward your financial garden today. Until next time, may your growth be gentle, your finances peaceful, and your future full of quiet abundance. Thank you and see you again soon.